If you've been thinking about a Roth conversion, the 2025 through 2028 window created by the One Big Beautiful Bill Act may be the most strategic time to act. In this lesson, you'll learn how to convert your IRA using a Roth-friendly annuity. This will help you reduce future taxes, avoid RMDs, and create tax-free income for life, all while staying in your current tax bracket. If it's your first time here, I'm Dr. Amanda. Welcome to the Retirement Income School. This is your place to get financial education that will help you protect your wealth and create guaranteed lifetime income so you can retire financially relaxed. Let's dive right in. When you're thinking about a Roth conversion, the reason is because of taxes. And so if you're considering your retirement income plan and you want to apply the One Big Beautiful Bill to retirement income planning, let's think about this window of opportunity that's been created. So there have been extended tax brackets. The Trump era tax brackets are now preserved through 2028, creating a temporary window of lower rates. We've also got lower income tax rates with current favorable income tax rates temporarily maintained but likely to increase after 2028. And then there's a senior deduction that's been added for those who are 65 and older. So this is $6,000 per person for seniors, which further reduces your tax liability during this period. So after 2028, higher tax rates are likely to return, which makes this a great opportunity to consider a Roth conversion right now if you have a qualified IRA or 401k. Think about this window where you have a limited period of time, 2025 through 2028, that window to convert from an IRA using a Roth conversion strategy. There's this historically lower tax rate. So you want to do this before the tax rates potentially increase. This is going to help you eliminate RMDs because Roth IRAs have no required minimum distribution. This gives you complete control over your withdrawals. Another huge benefit of this window is that Roths give you tax-free growth. So all future growth and all future withdrawals are completely tax-free. This is huge when we think about that we don't know where tax rates are going. Although if we were all sitting in a room together with thousands of people and we said, where do you think tax rates are going in the future? Most people are going to say that they think they're going to increase. So using this window of opportunity to convert your IRA to Roth, then your future benefits, your future growth is going to be tax-free. This is a huge, huge benefit. And then also thinking about planning flexibility. So when you convert to Roth, you have more options for retirement income planning and legacy strategies. Diving into the real problem a little bit more, it's really RMDs. You want to eliminate your required minimum distributions. So when you turn age 73 or 75, depending on what year you were born, you have a forcible taxable withdrawal, whether you need the money or not. So if you have an IRA that's qualified money, that's pre-tax, you're going to be forced to take money out whether you need it or not after age 73 or 75. That's an RMD, required minimum distribution. And why this matters is because RMDs increase your taxable income, creating a cascade of tax consequences that compound over time. So I want you to think about it this way. Let's say you have a $1 million IRA, you haven't paid any tax on that money, and then at age 75, you have no choice but to start taking money out of your IRA. Now, every year that you take that money out, you're going to be taxed, and it's going to increase your taxable income. Now, if we think about right now, let's say you're age 65, in 10 years from now, where do you think taxes are going to be? Increased. Now you're adding income, which increases your tax bracket. So the 6 main RMD problems are that you end up in a higher marginal tax bracket. Your taxation of Social Security increases, and you can be taxed on up to 85% of your Social Security. This is going to increase your Medicare IRMAA surcharges. It could also cause a loss of deductions if you're a business owner. You also need to think about the widow's penalty. So what that means is that when one partner dies, your tax bracket changes from married filing jointly to single, which now your tax brackets are higher with the same amount of income. Let's say you haven't converted to Roth and you have to take this money out of your IRA. Now you've increased your amount of income and you're in a higher tax bracket. That's the widow's or widower's penalty. And then the other issue with not converting in RMDs is that your heirs inherit the tax liability. And what's really problematic about this is that let's say that your kids inherit your IRA when you pass. Most likely when this happens, they are going to be in their highest income earning years. And so now they are inheriting a big tax problem and RMDs to go along with it. So these are the reasons that you really want to consider a Roth conversion, especially in this window between 2025 and 2028. Now let's look at a case study example of an IRA millionaire who decides to do a Roth conversion, just so you can think about how this might play out for you. So here's Barbara. She's 67 years old. She has $1 million in a traditional IRA. And the strategy that we're going to use for her is specialized Roth conversion software. This is going to show us exactly how to convert the right amount. Let's say in this case, it's $250,000 per year over the course of 4 years. And she's going to be able to do this without any direct out-of-pocket cost, no principal balance reduction, and she's going to stay in the same tax bracket. So again, I'm going to say that this is really important. So the software that I use to do Roth conversions helps you have no principal balance reduction. So her $1 million stays the same. She has no direct out-of-pocket cost to convert the traditional IRA into Roth income, and she stays in the same tax bracket. So if you could do those 3 things, why wouldn't you consider doing a Roth conversion? It's a very smart strategy. The way we do this is that we use our software to tell you the exact amounts, and we use a Roth-friendly annuity. So the way this works is that we use an A-rated annuity carrier. There are 757 carriers that sell annuities, but there are only 5 carriers with Roth-friendly annuities. And what these Roth-friendly annuities offer you is protected growth, guaranteed income, and tax-free legacy. So what we would do with Barbara's money is we would take that $1 million from her traditional IRA. We put it into a Roth-friendly annuity. So then she has protected growth because that annuity is market linked. So she can get market linked returns, but there's a 0% floor, meaning that the money in her annuity can't go below 0%. She can't have any loss in that annuity. So she has protected growth using this fixed index annuity. There's also guaranteed income. So once that money is converted, and remember we said there's no out-of-pocket expense because the taxes are being paid from bonuses and growth within the annuity, and then the money all gets converted. In this case, we said over the course of 4 years, and then she has a guaranteed lifetime income stream. Now that income is tax-free because it's been converted to a Roth IRA. And when that income is pulled from the annuity within the Roth IRA, all of the income is tax-free, which means now you're not going to have that increased income that's going to cause the cascading effect of RMDs because now you don't have RMDs. This also gives you the opportunity to have a tax-free legacy because when you pass on Roth inheritance, it's tax-free. So you're not burdening your heirs with tax problems. So that's how the Roth conversion strategy works when you're using a Roth-friendly annuity. Now let's recap that strategy so you really understand it. We're going to convert strategically, not all at once. And you're going to use a Roth-friendly carrier. So we take the qualified IRA, put it into a Roth-friendly annuity. So we move your IRA into a fixed indexed annuity designed for Roth conversions. Then there are internal Roth conversions that happen, converting portions to Roth over time, using gains inside of the annuity to help offset taxes. So you don't have any out-of-pocket expense. This is one of the biggest reasons that people hesitate to do a Roth conversion is because they think I'm going to have to come up with thousands, sometimes hundreds of thousands of dollars of out-of-pocket expense to pay for the taxes when I do the conversion. But when we use a Roth-friendly annuity, we convert portions over time inside of the annuity, and this pays for the taxes. So you have no out-of-pocket expense. And then this creates a tax-free income stream. So you enjoy guaranteed tax-free income or growth. Maybe you don't need an income and you just decide I want that money for growth and I want to pass it on to my heirs tax-free. So either way, the income that you get from that Roth-friendly annuity is going to be tax-free, or the growth that you get and you pass on to your heirs is going to be tax-free. So the result for Barbara is that by the age of 75, she has no RMDs. She's eliminated the forcible taxable withdrawals, which has saved her thousands. She's protected the growth of her IRA. There's no market volatility. There's zero loss. She has potential gains. And now she has tax-free income and legacy, meaning that all of the income and inheritance withdrawals are completely tax-free from here on out once she's converted to Roth. And I really want to emphasize these points about gains. So if the annuity is inside a Roth IRA, this is what happens to the gains. Growth is tax-free. Withdrawals are tax-free. There are no RMDs. You have no IRMAA hikes, and you have no tax for your heirs. This is mind-blowing, and I really want to emphasize how powerful this is. The growth is tax-free. All earnings, all growth that accumulates in your Roth are tax-free. So in our $1 million IRAs example, that can grow to $6 million over the course of 30 years. When it grows from age 65 to, let's say, 95, now you're passing on $6 million tax-free. This is huge. There is nothing else that you can do this with in terms of taking IRA money and putting it into a safe environment where it can grow and have no chance of loss and then be passed on tax-free. You can get your income tax-free when you pull it from your Roth-friendly annuity. You will have no RMDs, so you're not going to have those cascading consequences of increasing income with RMDs and increasing tax problems. You're not going to have IRMAA hikes, which IRMAA causes Medicare premium increases that are triggered by higher taxable income. So if you have RMDs, you have higher IRMAA charges, which keep increasing over your life course. And this causes you to pay more and more and more for your Medicare premiums. And this can really add up because there are 7 tiers of income in IRMAA charges. And we all know that medical expenses continue to increase. So those IRMAA charges can get really, really out of control. So when you do a Roth conversion, you're preventing that from happening. Ultimately, converting your IRA to Roth is one of the safest money strategies available. Let's recap and consider why now is the time to do a Roth conversion and not later. So number one, the One Big Beautiful Act gives us the 2025 to 2028 window to act, and this is providing optimal conditions for Roth conversions. Number two, after that, tax rates could increase. We have uncertainty in the possibility of increases, though most people believe that taxes are going to need to continue to increase in order to deal with the national debt that continues to increase. So that's going to make your conversions more costly in the future. Number three, when you do a multi-year Roth conversion now, it's going to put you in the lowest tax bracket possible in the future. So you're spreading your conversions over multiple years, and this minimizes the tax burden in your current year and in future years. And number four, after 59 and a half plus 5 years, you have tax-free income for life. So once you satisfy age 59 and a half and you've held a Roth for 5 years, then you'll enjoy completely tax-free income and tax-free growth. So if this got you interested in considering a Roth conversion strategy, head on over to retirementincome.school. You'll see a link at the top of the page that says book a retirement income Q&A call. You'll have a conversation with me and I can run a Roth blueprint for you using your unique numbers, your IRA, the number of years, your tax bracket. So this is going to be unique to every single person. This is a really great strategy for you if you're sitting on an IRA or a 401k, qualified money, and you're thinking, I really want to do a Roth conversion so that I can eliminate those future tax problems. This could be a great strategy for you. So retirementincome.school, book a call with me and we'll run a Roth blueprint for you. Thanks for being here for another lesson. Be sure to subscribe to the channel or the podcast if you haven't done so yet. Turn on the notification bell so you never miss out. And continue to stick with me here at the Retirement Income School, where I'll bring you lessons to help you keep your money safe and make it last so you can enjoy retirement. This content is for educational purposes only and is not financial, legal, or tax advice. Always consult a qualified professional before making decisions about your retirement.